Hi traders, you are welcome to my video on the SMC Scalping Trading Strategy. Alright, so this is a method that allows you to combine smart money concepts with lower time frame precision. Scalping is all about quick decision making, okay, but when you add smart money concepts into the mix, you are no longer relying on random entries. Instead, you are aligning your trades with the logic of the market, which are structure, liquidity, and institutional activity. Let's just break it down step by step. Now, the first piece of this strategy is market structure. Okay, even on the lower time frame, structure tells you the story of price. Are we in an uptrend? Are we in a downtrend? Or are we in a ranging environment? So currently you can see that we are in, this is the 15-minute chart, right? So we're currently in a bearish trend on the 15-minute chart, right? You can see that we have lower highs and lower lows. This is just an easy way to identify the trend, okay? With your lower highs and lower lows, you'll be able to identify the trend. Now, once you have identified the trend, remember that identifying structure shift is critical for scalpers because it signals where momentum is moving. A break of structure on the 15-minute chart, for example, since we are using the 15-minute chart, as our smaller time frame, because of course you can use the 1 minute if you want, depending on the kind of scalper that you are. You can use the 1 minute chart, you can use the 5-minute chart. Okay, so a break of structure on the smaller time frame can point to where smart money is heading. All right, then the next thing, you have to talk about liquidity sweeps. Okay, on smaller time frames, liquidity is taken frequently. You often see price spike above highs or dip below lows, only to reverse right after that. So liquidity sweep often occurs, probably frequently on lower time frames. There is a lot of noise on lower time frames, right? So, and that is the reason why you should be careful when you're picking your lower time frame. If you want to use the 1 minute, well, you might find a lot of liquidity sweeps on the 1 minute chart. So just know your tolerance. Okay. Now, I'm trying to say if we can find a good example of a liquidity sweep, but basically I can just explain what that means. Probably you have a support zone and you are thinking that price is going to respect that zone if it gets broken, only for price to break below it. Okay, I'm just going to use this as an example. It might not be a perfect example, but I'm just going to use it as an example. So assume that you can see this particular place where price spiked below this zone, right? There was actually a spike below it, and then this was a gap though. The gap spiked the price below, dropped the price below this zone, and then only for it to reverse. So if you are a breakout trader and you just jumped in to sell after this, you might just get stopped out because price might just be grabbing liquidity below that zone. This is not a perfect example though, but I'm just using it as an example where price fell below a support zone, and you're expecting it to go down further, but you just see the price reversing. Okay, so such things happen frequently, and then you might even find it more frequently on the lower time frames. Okay, and then these are liquidity grabs, and they are a key part of scalping with smart money concepts. When you see such things near your areas of interest, it can be the confirmation that you need before entering the trade. Another important element is the order block. Institutions leave footprints in the form of strong impulsive moves, and these moves often originate from specific candles. When scalping, you mark out these order blocks and you wait for price to return. So basically, your order blocks are going to be the last, for example, a bearish order block. You're going to have the last bullish candle before a bearish impulsive move that led to a break of structure. So you can see that we had a break of structure around here. So we had a break of structure around here, right? The price fell below this low. Now, this was the last bullish candle before this break of structure occurred. So it means we have a bearish order block around here. So what we just have to do is to wait for price to get back into this zone. Okay. You know, you wait for price to revisit that zone, and once price revisits an order block and you see liquidity taking or structure confirming, that's when you look for your precise entry. But here is the important part: confirmation. Okay, scalping without confirmation can lead to unnecessary losses. So instead of entering blindly, just wait for signs of rejection, liquidity grabs, or minor structure shifts within your zone. Okay, this keeps you scalping, you know, in an aligned way with smart money activity and prevents you from chasing impulsive moves. So how do you apply all of this in real conditions? You have to start by identifying the higher time frame direction. Even scalpers need context. So you might be scalping on the 15-minute chart, but you can decide to go to the 1 hour chart to check if you have a bearish move. Since we had a bearish trend on the 15 minutes forming, right? You can just go to higher time frame, maybe even 4 hours chart, and see whether you have a bearish, maybe you have a bearish structure. Now, the overall trend on the 4 hour is actually a bullish trend, right? But you can still look out for example, you can see this trend line was respected consistently, but then at this point, you can see we had a break of that trend. I can see how strong this bearish candle is. So there could just be a possibility that a bearish move might be on the way, right? So perhaps on the 1 hour chart, we can just look for any break of structure, bearish break of structure. Okay, we have not exactly, okay, we had a bearish break of structure around here. Can you see that? So now if you have a confirmation on the higher time frame, then you can of course, you know, look for your entries on the lower time frame. Okay, once you have identified the higher time frame direction, you drop down to your lower time frame charts and mark your structure, you know, liquidity and other blocks. You wait for the pullback or sweep, you look for confirmation, and only then should you take your entry. The SMC scalping trading strategy is effective because it forces discipline. Instead of reacting emotionally to every candle, you have a framework which are structure, liquidity, order blocks, and confirmation. So it keeps your scalping approach consistent and logical. Okay, to recap these steps, first of all, you should identify structure shifts on the lower time frame. Okay, then you watch for liquidity sweeps near highs and lows. You mark out your order blocks from impulsive moves. You wait for price to return and give confirmation. Then you execute with confidence once all the conditions are met. So that is how you bring smart money precision into scalping. It's not about speed alone, it's about structured entries guided by the same principles that institutions use. So if this breakdown helped you, don't forget to click the like button and subscribe to the channel. Turn on notifications so you never miss the next strategy breakdown. Thank you for watching, and I'll see you in the next one. Happy trading.